All right, so what's going on, subscribers and subscribers to be? If you're new to the channel, thanks for checking us out. If you already seen some of our videos before, thanks for returning. Today I'm going to be talking to you guys about the top 5 stocks that I'm personally going to be picking for February of 2020. All right, so the first stock that I want to get to is Uber. If you don't already know, Uber is predominantly a ride-sharing app or ride-sharing company where they offer rides to people for low prices. Basically, the taxi of the 21st century, they kind of phased out the whole taxi thing. When it comes to rideshare, the main reason that I'm picking Uber is because they are one of 2 companies in a duopoly. Pretty much the only companies that are in the rideshare business that are dominating right now is Uber and Lyft. And Uber is the biggest of the 2. Not only is Uber the biggest of the 2, meaning that they are the biggest here in the United States, but when you're looking at things globally, Uber is still the largest. They have other companies that they have purchased, ride-sharing companies that they have purchased in other countries. Even outside of ride-sharing, here in the United States and abroad, they also have purchased other companies to kind of help and assist with what they already do. For instance, here in the United States, we have Uber Eats. Uber Eats is a delivery service for businesses where, let's say there's a business that doesn't already have delivery drivers, or they're losing money on delivery drivers, they can hire Uber as a third-party company to kind of take care of that aspect of the business for them. And Uber Eats is something that I've personally used. The Uber ride sharing is something that I've also personally used. And it's been brought to my attention recently that they also have this thing called Uber Freight, which is basically still ride sharing, but it's more so for 18-wheelers and larger trucks, where truck drivers can basically join the Uber system, pick up loads they can pick up loads with other companies through Uber, and basically be able to work with multiple companies at the same time through Uber, compared to the average truck driver who only works and picks up loads for one company. If you were to drive trucks for Uber, you could technically lease or pick up loads and run those loads for multiple companies. I do see that being a problem, like just same way it was for the taxi companies. I can see Uber eventually being a problem for other delivery companies when it comes to delivering food, as well as freight companies, larger freight companies. Uber is definitely going to step in and be a problem for them. Another reason that I'm purchasing Uber is due to their share lockup that they recently experienced. Typically, I don't follow companies that have recently IPO'd, like within the last year or 2. The reason being is because you have no way to fully know what was going on with that company prior to them becoming public. So I typically like to wait a while before I start to buy, which is what I did with Uber, and I'm glad I did because I noticed something that was really cool. Uber IPO'd, I want to say, was about May 10th of 2019. An interesting thing about it is when they went public, they had a 180-day share lockout for people who are already invested in the company. That 180-day share lockout ended sometime around early November. And if you go back and look at Uber stock over time, you'll see that in November it took a big loss, going from, I know, over its IPO value, going all the way down to about $25. At that point, that's when I started to purchase. I really like to get in on companies when their stocks drop for no reason. And what I mean by no reason, I mean like no reason on the company's end. There's nothing bad that the company necessarily did. The only reason that stock dropped is because after that 180-day lockout, a lot of its early investors sold out for a huge profit. So I really can't blame them for doing that. But once they sold out, the stock dropped to about $25. That's about the time I started picking up on the stock itself. Right now, today, I think is at $37. For right now, I'm buying Uber all the way up until about $45, which is right above its initial IPO. I do personally believe that it's going to be worth more than that in the future. If we have a recession or something like that, I can definitely see more people sharing rides with Uber. If we don't have a recession, I can still see something like Uber still growing a lot in the future. Most major cities at this point have Uber, but there's still a lot of smaller cities that do not have these ride sharing capabilities. Even certain places like my hometown, Sparta, Georgia, for years we did not have a taxi. Uber can now provide an opportunity for more taxi drivers. Almost anybody in that town can now be a taxi driver thanks to Uber. So that's one of the reasons that I'm heavily invested in Uber right now, especially in February 2020. So the next company that I'm going to be investing in this February is a company called Alibaba, ticker symbol BABA, Alibaba. A lot of people don't know, especially in the United States, don't know too much about this company here. The reason being is because it's a Chinese company. But right now it's definitely one of my favorite stocks to invest in for numerous reasons. If you don't already know, Alibaba is kind of sort of like an Amazon for China. They literally have multiple companies that do multiple things. They provide customers with products as well as numerous services. On the screen, I'm going to put up a picture showing some of the services they offer, but you'll see that Alibaba, this one company, rivals numerous companies that you may be familiar with. If you were to look at some of the market that they can take advantage of in China, which is a lot bigger than what we have here in the United States, I could possibly see Alibaba one day actually getting bigger than Amazon. Alibaba currently has a PE ratio of about 24. That's kind of high for what I like for most stocks. But this is a stock that's currently still growing, a company that's currently still growing. So for a growth stock, PE in the low 20s is actually pretty good. Another thing that I like about the company is their CEO, Jack Ma. Anytime you have a good CEO leading the company, that company for the most part is going to do well. I would advise you guys to check out a couple of his videos to see some of the things that he's doing. Really, really great guy who's running a really great company. Side note, the whole coronavirus thing is going on right now. He actually put up a couple $1 million to actually build hospitals and treat some of those victims. So yeah, like I said, even in and outside of business, great owner. So typically, if you find a company with a good owner, it's worth paying attention to. Speaking of that coronavirus, the last major reason I'm investing in Alibaba right now, February 2020, is because I think that its stock should right now already be higher. And the only reason I believe that the price is being suppressed is because of number one, right now you have the coronavirus that's going on in Asia, specifically China, which is where Alibaba is located. And that's kind of, like I said, suppressing that stock. And number two, over the past year, we've been looking at the whole trade war and political issues that have been kind of affecting the company. With the trade war being between the United States and China, and this being a Chinese company, I do think that that's the major reason that this stock is kind of where it is. If I'm not mistaken, I know last week it was at around the low 200s. I think today it's at around maybe 220 something. The stock is starting to go back up. But me personally, I'm purchasing Alibaba right now anywhere in the, of course, if it goes lower, I'm buying, but all the way up until possibly the 250, 275 range. I'm really liking that stock. It's going to be one of the bigger stocks for China, which is basically taking over the world right now. So if you're noticing that and you're interested in kind of investing or capitalizing on what China has to offer, Alibaba is one of those companies. All right. So the next company that I'm going to invest in February of 2020 is definitely going to be Facebook. Ticker symbol FB, Facebook. The reason I'm investing in Facebook right now, in my opinion, Facebook still has a lot of growth ahead of it. It currently has a PE of about 31, and with that growth that I see projected being ahead of it, I still think that the stock is pretty low right now at that price. And what I mean when I'm referring to growth for Facebook is not necessarily subscribers, even though I still think that will continue to trend upward. But what I'm referring to is more so its ad revenue. In recent years, Facebook ad revenue has been on the increase. If I'm not mistaken, in the last year, it's been about a 28% increase. And if that revenue continues to go up, I can see Facebook making a lot of money. I was talking to a guy about this earlier today, and he was telling me, well, how he wasn't really sure about Facebook, being that it's kind of like MySpace, and it will probably go away over time. And that conversation got me to thinking. What happened with MySpace? MySpace kind of didn't go away. It was more so its subscribers transitioned over to Facebook. And I was thinking, and the guy was mentioning it as well, what if people were to transition away from Facebook to something new? And he had a good point, which led me to more so think into it and research a little bit more. And I realized that Facebook recently, well, about a couple years ago, they purchased Instagram. I think it was Instagram. If I'm wrong on that, correct me down in the comments. But Facebook purchased Instagram. What Facebook is doing, all of their smaller competitors, they're consuming them. They're buying the companies. With a company like Facebook, I don't see too many of its subscribers going anywhere, because if another company was to come and attempt to do what they're doing, they could buy them up, and they really have the money set aside. They have billions of dollars set aside where they could buy a smaller rival or a smaller competitor. For my companies that I own, I personally advertise through Facebook. Right now, I notice that a lot of smaller companies are actually doing this, and I'm also noticing that a lot of larger companies are starting to step onto that trend. And to be honest, if you look at like television, radio, and all that good stuff, of course you can still make money placing ads there. But me personally, I see Facebook being a better way to place those ads. I get better results from Facebook than I would from my local radio station. So I can see a lot of other companies, larger local companies as well as international companies, starting to advertise through Facebook. And if that continues to happen and increases year by year, the stock is definitely going to go up. So right now, I know Facebook is in the low 200s. I'm probably purchasing Facebook all the way up to $300. I'm a bit bullish on it. Leave a comment down below if you think I should or shouldn't do that. But as for right now, I'm almost as sure about Facebook as I am about these first two. These three right here, I'm really trying to put money towards for February as well as the rest of 2020 if the stock doesn't jump too high in a short amount of time. So the next stock that I'm going to be purchasing in February of 2020 goes by the name of Berkshire Hathaway. BRK is the ticker symbol for the one that I'm going to be talking about today. Is BRK.B. Berkshire Hathaway has basically two stocks. One of them is, if I'm not mistaken, worth about $250,000. So that's not the one that I personally own, because I do not have $250,000 to put into that. But Berkshire Hathaway stock B is much lower, right around $200. I initially got into this stock at about $190. That was about a year ago, and it's still in that same range. And that's the biggest reason that I'm purchasing this stock right now. If you don't know, Berkshire Hathaway is one of the most successful companies in the United States history. It's partially owned by Warren Buffett, who's the guy who has made the most money from the stock market in the U.S. history, well, probably the world's history. It's a company run by some great owners. They, just like Amazon and Alibaba, have a lot of stocks, a lot of other companies under them. Some of the companies that Berkshire Hathaway owns includes like Geico, Clayton Homes, American Express. I know they have a lot of share in Delta. They may even have a lot of Apple share. But this company owns a large stake in a lot of other companies. And it's, for the most part, how they make their money. If you haven't heard of him or don't know too much about him, I would definitely recommend that you guys go and research Warren Buffett and this company and see some of the things that they're doing, some of the things that they've done over time, and I don't see it stopping anytime soon. I'm not going to spend too much time on that one. Like I said, you should definitely spend the time to go research that one on your own, but that's one of my biggest buys over time and throughout history as well, Berkshire Hathaway. Another stock that I've been getting into recently, which is number 5 on my list, is going to be Procter & Gamble, ticker symbol PG. Procter & Gamble, as you guys can see, is like a trend here. Procter & Gamble owns a lot of companies as well. They have a lot of products that I'm almost willing to guarantee are going to be in your home. Anything from Bounty to Charmin tissue to Gillette razors to Febreze, um, Tide. Some of your typical household goods are produced by Procter and Gamble. Right now, Procter and Gamble has a PE of 73, which is kind of high, especially for a company that has been around for a long time. But I do see them growing a lot. The other day I was in Walmart and I saw that Procter and Gamble basically had a whole aisle in Walmart to themselves for their cleaning products. That's a big thing. I don't know too many companies who can do that type of thing. But aside from that, it's one of the products that I use every day. I have numerous. I use numerous. I use multiple of their products every day. So being that I use it every day, it is, even though the stock for me at a P of about 73 is a little bit overpriced. I don't see it going anywhere. Long term is one of my bigger buys. I'm definitely loving this stock. So yeah, check that one out. With that being said, these are my 5 stocks: Uber, Alibaba, Facebook, Berkshire Hathaway, and PG, Procter and Gamble. As a thank you for watching this entire video, I do have one bonus stock, and that bonus stock is going to be Square. I think their ticker symbol is SQ. Square, if you don't already know, is kind of like a 21st century new version of what a debit or credit card is, more so a debit card. Square is an app that you can basically link to your bank account, and you can use the app itself as a debit card. It comes with a debit card that you can physically use, and you can also digitally transfer money to other people from one cellular device to another cellular device using the app. I use it all the time. I have a lot of customers for some of my other businesses who use this app. So yeah, it's definitely a buy for me as well. I don't know how much I'm actually going to be purchasing in February, being I'm going to be focusing on these stocks, but it is one that I want to get to as well. If you didn't already know, aside from the Square card reader, Square also owns Cash App. Cash App is another way for you to send money. It's very popular in colleges, among young adults, as well as kids. Kids in high school or whatnot, whose parents, of course, have attached a bank account to their app. But Cash App, almost everyone that I know uses Cash App or either Square for sending money to people. Western Union is for the most part being replaced with Cash App and Square. So that is another company that I would definitely look out. With that being said, you guys, if you're interested in investing in the stock market and you don't already have a means, look in the description below for my link to Robinhood. If you sign up using my link, Robinhood will give you 1 free stock. So this is basically my gift to you along with this bonus stock pick. Thank you for watching the video. Thank you guys for your time and have a great day. Hop in the bag, go get the money, count that cash and back to the money, put that on repeat. Go get the bag, and now we coming. If you really about your money, put $1 in the app. If you really about your hustle, put $1 in the app. You ain't taking else for nothing, put $1 in the app. You ain't got no hustle muscle, get the fuck up out of here.